Hello, welcome to IG. I'm Angeline Ong, and this is your special look ahead to the coming week, starting the 29th of April. Let's kick off the calendar for you because it is a mega week for not just economic data, but also earnings. But let's just get through the economic calendar first. Eurozone economic sentiment and CPI inflation out of Germany. And then further along the week, we've got industrial production, retail sales for Japan, as we keep an eye on that 155 level. China out with its Caixin GDP numbers out of France and Germany will be key after cooler than expected US GDP numbers. And consumer confidence out of the US will be the one to look out for. But there's plenty more out of the US later on in the week, including a Fed interest rate decision and consumer confidence out of Japan. What the Fed says, any comments about the timing of a Fed first cut will be key, as that is moving further back into the year. Some out there, some market watchers now looking for perhaps a one cut before the end of the year. Some even say maybe now the Fed doesn't have to do anything, given the US economy seems to be in that not too hot, not too cool, just nice area still. And then on Thursday and Friday, look out for key details from Japan. This is the Bank of Japan minutes, trade balance numbers from Australia and from the US as well. And initial jobless claims and factory orders come ahead of that all-important non-farm payrolls on Friday, when we also get industrial production from the Eurozone. On the earnings front, a wave of numbers and results from key major corporations, both sides of the Atlantic. Philips out with Q1 earnings, and then HSBC, Deutsche Lufthansa, Volkswagen, Coca-Cola, Amazon, a key stock for our clients, McDonald's and PayPal fly into the picture. Aston Martin, GSK, Pfizer, Qualcomm, Kraft Heinz, and AIG also join the earnings party. And then the big one in the tech space, of course, is Apple out with Q2 earnings. And watch out for Shell. We'll have a special analysis of that from Chris Beecham, along with Standard Chartered and ConocoPhillips. And we end the week with Intercontinental, Trainline, Credit Agricole, and SocGen as well. Let's cross over to Chicago now, where Anthony Batista is standing by. Anthony's from Tasty Live, of course, and it's been such a huge week so far, and it's going to be even bigger next week. We've seen some mixed results, but what can we expect in the coming week?
Sure. Yeah, there's been a lot of economic data, but also earnings have been on the front burner for everybody. You just mentioned 6 Dow stocks there, of course, with Apple and Amazon being the two that everybody will look for. For me, I think it really is the first story you touched on, and that's interest rates here. Bonds continue to go lower in the U.S., where the long-year bond is trading around 113 and change. If you don't see that over 115, 116, I think you're going to get a lot of talk from the Fed saying that maybe we don't need that rate cut at all, with, as you mentioned, us being in that Goldilocks, not too hot, not too cold kind of economy here in the U.S. So, man, I think this is going to be a trying week. We need a nice Apple earnings push, and we also need some nice Fed speak. I think you're going to see volatility uptick in the market next week. Volatility reached its 6-month average earlier this week. I hope we see it again next week.
I'll be sure to put in a good word with Jay Powell for you, Bat. Remember you saying that we need some good Fed speak. It's key, isn't it, that money markets, I mean, I'm just looking at this too, the latest being 35 basis points of rate cuts from the Fed. That's what's expected now. And we've come off from such a high base. I mean, coming off from 150 basis points. I spoke to Chris Vecchio the other day, and he said inside he's actually thinking no cuts at all this year. Do you think we might be at that point at the end of the coming week?
Yeah, it's funny how quickly sentiment changes in the bond market. I am of the feeling that the market itself actually pushes the hand of the Fed with the market pricing. And by the market pricing, I'm talking about the bond prices that you just mentioned. And right now, the market is telling the Fed, market doesn't need anything at this point. Now, I think that's going to be a little bit of a damper if they come out with saying something like that to the overall market, because I think the market expects a little bit of a rate cut here. We've gotten to like those cuts. Again, that's why I think volatility might creep up a little bit in the coming week or two.
And certainly we saw the markets this side sour after Meta's miss. I mean, are we going to see a similar reaction if we don't see Apple pull something out the hat or Amazon pull something, give us a nice boost?
Yeah, Apple up until the last week or so has really been a dog in the Dow. Um, I'm gonna guess, and of course this is always just a guesstimate. I'm gonna guess that Apple earnings are going to be okay. Remember, it doesn't matter what they come out with. We saw Meta come out with great earnings and the stock went lower. We saw Tesla come out with not the best earnings and the stock went higher. I think you're going to see that kind of same thing in Apple. I think it's going to be more about the guidance than the actual numbers themselves in Apple. Hopefully, it'll surprise to the upside.
All right, thank you very much. We'll leave it there. Thanks very much to you, Bat, all the way from Chicago, Tasty Live, part of IG Group. And that's your look ahead to the week starting the 29th of April.